You may already understand basic real estate terms like cash flow, rental yield, and mortgage. But when experienced investors talk, the language becomes very different. They talk about leverage, equity, market cycles, and due diligence. And if you don't understand these terms, you don't just miss a few words, you miss the entire conversation. This is the gap between intermediate English and advanced financial English. So today, we're going to close that gap. We'll explore 15 advanced real estate vocabulary words used by experienced investors in real-world conversations. Welcome to Decode Advanced English on Wealth by Hana House, where English meets finance, investing, and real-world thinking. In this lesson, we'll continue our vocabulary review with more advanced real estate investment terms. These expressions are commonly used when investors analyze properties, manage portfolios, and discuss investment strategies. Let's begin with our first word. Word 1, leverage. Our first word is leverage. Leverage means using borrowed money to increase the size of an investment. Example: real estate investors often use leverage to buy larger properties. Mini dialogue.
That building looks way too expensive for him.
It is. He didn't pay all in cash.
So he used leverage.
Exactly. A bank loan helped him control a much larger asset.
Next is portfolio. A portfolio is a collection of investments owned by an individual or company. Example: many investors build a diversified property portfolio. Mini dialogue.
I used to think owning one property was enough.
Most experienced investors don't stop at one.
They build a portfolio instead?
Yes, multiple properties with different income sources.
Our next word is diversification. Diversification means spreading investments across different assets to reduce risk. Example: investors often use diversification to protect their portfolio. Mini dialogue.
He owns apartments, offices, even retail stores.
That's diversification.
So he's spreading risk?
Exactly. If one sector slows down, others can still perform.
Next is capital appreciation. Capital appreciation refers to an increase in the value of an asset over time. Example: many investors buy property for capital appreciation. Mini dialogue.
She held that property for 10 years without selling.
She was waiting for capital appreciation.
So she wasn't focused on rental income?
Not mainly. Her profit came from the price increase.
Our next term is return on investment, or ROI. ROI measures the profit earned relative to the amount invested. Example: investors often compare opportunities using ROI. Mini dialogue.
This investment looks good, but how do we compare it?
So investors usually look at ROI.
So it's about profit relative to what you invest?
Exactly. It helps you compare different opportunities.
Next is equity. Equity refers to the value of a property that the owner actually owns after subtracting loans. Example: as mortgage payments decrease, equity increases. Mini dialogue.
Why do homeowners like rising property prices so much?
Because their equity increases.
Even if they haven't sold yet?
Yes, their net ownership value grows.
Next is property valuation. Property valuation is the process of estimating the market value of a property. Example: banks require property valuation before approving loans. Mini dialogue.
The bank sent someone to inspect the building.
That's part of property valuation.
So they want to know its real market value.
Exactly, before approving the loan.
Our next word is asset allocation. Asset allocation means distributing investments among different asset types. Example: some investors allocate part of their portfolio to real estate. Mini dialogue.
She invests in stocks, crypto, and real estate.
That's her asset allocation strategy.
So she's not relying on just one asset class.
Right, it helps balance risk and return.
Next is market cycle. A market cycle refers to the periods of growth and decline in property markets. Example, experienced investors study market cycles carefully. Mini dialogue.
Why is he waiting instead of buying now?
He's watching the market cycle.
So timing matters?
A lot. Buying at the wrong phase can reduce returns.
Next is liquidity. Liquidity refers to how quickly an asset can be converted into cash. Example, real estate generally has lower liquidity than stocks. Mini dialogue.
Why do investors say real estate is less flexible?
Because it has low liquidity.
Meaning it's harder to sell quickly?
Exactly. Unlike stocks, which you can sell almost instantly.
Our next word is due diligence. Due diligence means carefully researching an investment before making a decision. Example, investors perform due diligence before purchasing property. Mini dialogue.
He spent weeks checking that property.
That's due diligence.
So it's more than just visiting the place.
Much more. It includes legal, financial, and market checks.
Next is financing. Financing refers to obtaining funds to purchase an investment. Example, many investors rely on bank financing. Mini dialogue.
I don't think they had enough cash to buy that office.
They used financing.
So the bank helped fund the deal.
Exactly. That's very common in real estate.
Our next word is collateral. Collateral is an asset pledged as security for a loan. Example, property is often used as collateral for bank loans. Mini dialogue.
Why was the bank comfortable giving him that loan?
Because he provided collateral.
So the property itself secured the loan.
Yes, that reduces the bank's risk.
Next is investment strategy. An investment strategy is a plan used to achieve financial goals. Example, successful investors follow a clear investment strategy. Mini dialogue.
She only buys rental properties, nothing else.
That's her investment strategy.
So she's focused on cash flow.
Exactly. Every investor has a different approach.
Our final term today is property portfolio. A property portfolio is a group of real estate investments owned by an investor. Example, many experienced investors build a large property portfolio over time. Mini dialogue.
He owns 10 buildings now? That's huge.
Yes, that's his property portfolio.
So it took years to build that.
Definitely. Most portfolios grow gradually over time.
Today we explored 15 advanced real estate vocabulary words, including leverage, diversification, capital appreciation, ROI, equity, market cycle, liquidity, and due diligence. These terms frequently appear in discussions about real estate investing and financial analysis. Understanding them will help you follow conversations between professional investors and financial experts. So far in this series, we've explored many concepts related to real estate investing, but investing is not limited to property. Another major investment market is the stock market, so in our next lesson, we'll begin a new series about finance. Our next topic will be Stock Market Investing Explained. You've been watching Decode Advanced English on Wealth by Hana House, where English meets finance, investing, and real-world thinking. See you in the next lesson.